And I think what we're going to also see is a rotation out of crypto into gold. The only problem there is there may not be much to rotate because as people try to get out of Bitcoin, there won't be a lot of buyers. So I don't know how much money they'll be able to salvage from that busted trade. But I think you're going to see a big blow up in the crypto market in 2026 as the air really comes out of that bubble. Well, I'm not exactly doing a victory dance just yet, but things seem to be going in my direction. And I expect more of the same next year in particular. I think gold's going to have another very strong year. I think the miners are going to do very well. I think the dollar is going to be a lot weaker in 2026 than it was in 2025. The dollar weakened in the first half of the year, but so far it's kind of been treading water. I expect it to really sink in 2026. I think the Fed will, be back doing QE by then. So we'll even have easier monetary conditions, which will favor gold. And I think inflation is going to be accelerating, which will disadvantage bonds. So I think, you'll see more safe haven money flowing out of U.S. Treasuries into gold. That's going to be great for the miners, which I think are already much too cheap. And I think the central bank rotation out of dollars and treasuries into gold is going to continue. And I think what we're going to also see is a rotation out of crypto into gold. The only problem there is there may not be much to rotate because as people try to get out of Bitcoin, there won't be a lot of buyers. So I don't know how much money they'll be able to salvage from that busted trade. But I think you're going to see a big blow up in the crypto market in 2026 as the air really comes out of that bubble.
Yeah, and you're supposed to speak at the Binance Blockchain Week early December. And Michael Saylor is going to speak there as well. Are we going to see a debate between the two of you?
Well, I challenged him again. He's been ducking me for years. When I was at the Bitcoin conference in Las Vegas, they tried to organize a debate between me and Saylor because he was there too. In fact, when he gave his main talk, he mentioned my name twice. I was the only person he mentioned, but he refused to debate me. It was just he didn't want to do it. So I debated some lightweight, right? I forget who it was. I mean, no disrespect to whoever I debated, but it wasn't Saylor. And so I threw out a challenge on X, and I said, hey, Michael, I'm going to be at the blockchain week, Binance Blockchain Week in Dubai. We're both going to be there. I want to debate you on a different topic. I don't want to debate Bitcoin or gold. The topic I want to debate is I believe MicroStrategy, the whole business model, is a fraud. I think the company is going to go bankrupt, and I want to debate that. I want to debate MicroStrategy. Forget about Bitcoin, right? I want to debate the validity of his business model, which I think is flawed, and I think he's going around telling people stuff that's not true about his company. So I threw that gauntlet down. I doubt he's going to pick it up. But I will be debating CZ, who's not afraid to debate me at all. And in fact, the whole debate between me and CZ, what set that up is I did another Bitcoin podcast or crypto podcast, and I started talking about my tokenized gold product, which I don't have yet. I mean, I'm going to do it, but I've launched tgold.com, which is now just part of the Schiff Gold website. And right now, initially, you can go to tgold.com and you can buy gold and silver, and we'll store it for you. It's your gold. It's stored, in a facility with your name on it. You can sell it whenever you want and take whatever profits you may have, or you can hold on to it. Eventually, you will be able to withdraw it in my tokens. And once I develop them, but even before I get to the tokens, I'm going to try to pair up with a bank so that you can get a debit card or a credit card secured by your gold. And I want to open up peer-to-peer transfers so that customers of Schiff Gold can exchange gold back and forth with one another as a medium of exchange. You can gift your gold, or you can spend your gold, or more importantly, you can earn gold, right? If I have an account, I want to earn gold. Let me invoice my customers. Let me get some gold, for my goods and services if I'm running a business. So I really want to try to help, get people to use gold as not just a store of value, but a medium of exchange. So when I started talking about tokenized gold, that's when CZ went on X and he said, tokenized gold is bull, because you have to trust a third party to hold it. And he said, so it's like, trust me, bro. And then I replied and I said, well, first of all, what's Binance? Binance is a third party. Plenty of people have their crypto with Binance. Is that a mistake? But I also said that I don't think there's anything wrong conceptually with having a third party that you trust with your gold. I mean, plenty of people trust third parties with their cash right now. You trust a third party with a stable coin. You know, when you have a Tether or USDT, right? You're trusting somebody to hold your dollars, right? So the whole stable coin industry is built on a foundation of trust. And there's plenty of industries that are based on trust in capitalism. Insurance is a great example. People buy insurance, but it only works if the insurance company pays you. You got to trust that when you put in a claim, they're good for the money, right? They, you know.
And I also going to challenge him about his cozy relationship with Trump and him being pardoned by Trump.
That's not the purpose of my. Look, I'm happy that the guy's. First of all, he already served his time and he paid the fine, so the pardon helps. But he already suffered the consequences. I'm sure he got railroaded. I mean, the government, does this to a lot of people. I've been victimized by our government too. So I most likely, he wasn't guilty of the money laundering, and he just copped a plea just because it was easier. I know how the government shakes you down. There's a lot of corruption in the U.S. government, but I'm not there to debate CZ about that. I want to debate the premise of gold. A Bitcoin versus tokenized gold, because after he said that, I challenged him. I said, hey, let's have a debate. Let's debate Bitcoin versus tokenized gold. And he said, I accept. Nice. And then a day or two later, he said, hey, let's do it in person. Why don't you come to Blockchain Week? And that wasn't what I initially had in mind. I was like, let's do it on, YouTube or X. But, I'll do it. What the hell? I mean, I haven't been to Dubai in a couple of years. I enjoyed my time at the Vegas Bitcoin conference. I thought about staying. The same company is doing another conference in Abu Dhabi the week after Blockchain Week. But I'm going to skip that one because I committed to doing a gold conference in your neck of the woods in Amsterdam.
Right.
I think we're standing at the edge of one of the biggest tipping points the silver market has ever seen. Not a bump, not a correction, a full-blown, once-in-a-generation realignment. You can feel it in the numbers. You can see it in the movement of physical metal. The London Bullion Market Association, the COMEX, even the Shanghai Futures Exchange, all of them are showing visible stress. The inventories are thinning out, deliveries are exploding, and yet the mainstream media is pretending everything's fine. The average investor has no clue that the foundation of the global silver market is starting to crack. But you, the viewers who've been paying attention, this story doesn't end with another quiet cycle. It ends with a repricing event so violent that people will look back and say, how did nobody see this coming? Because the truth is, there's not enough physical silver to cover all the paper claims floating around. There never has been. It's a system that's been running on borrowed time and borrowed metal. Let's talk about what's really happening. Silver is being pulled from every direction. Industrial demand has gone parabolic. Solar, EVs, AI data centers, even new green hydrogen technology. All of it needs silver. Then you've got monetary demand. Central banks, sovereign wealth funds, and private investors. They're all competing for the same shrinking pile of physical supply. This isn't a demand story that's going to fade with a rate hike or a new tech fad. It's structural. For years, we've been told that silver is just a commodity, an industrial input like copper or zinc. But that narrative just got blown apart. The US government officially designated silver a critical mineral. That may sound like bureaucratic jargon, but it's not. It's a game changer. It means silver isn't just a metal anymore. It's a matter of national security. And when something becomes a strategic asset, everything changes. How it's traded, how it's regulated, how it's hoarded. Let me put this in perspective. The entire above-ground silver market is smaller than the market cap of one mid-tier tech stock. It's microscopic. So when major capital, think sovereign wealth funds, think government buyers, starts to flow in, it doesn't nudge the price. It detonates it. Silver doesn't rise gradually. It erupts. That's why I keep saying, we're not talking about a commodity cycle here. We're talking about a revaluation. Now, if you follow the physical markets, you'll know that the amount of silver leaving the LBMA and COMEX vaults has been staggering. We're talking record levels of physical delivery in markets that were never designed for it. These exchanges were supposed to settle mostly in cash, not metal. Yet month after month, we're seeing more entities standing for delivery, taking bars out of the system. That's the tell. The smart money doesn't want promises anymore. They want metal. And then there's Shanghai. Even that market, which used to be the world's physical anchor for silver, is showing strain. Stocks in the Shanghai Futures Exchange have dropped perilously close to 600 tons. That's considered the bare minimum liquidity needed to back the market. Once you breach that level, you risk a delivery default. And when that happens, you're not just talking about volatility, you're talking about panic. Now throw China's latest policy move into the mix. They've just started restricting silver exports. Think about that. The largest refining hub in the world, with 18 LBMA certified refineries, is locking the gates. That's the sound of the drawbridge going up before the storm hits. It's the same playbook we saw when they began stockpiling gold years ago. Quiet accumulation, then capital control. At the same time, the US declares silver a strategic mineral. China's locking down supply. Russia's adding silver to its strategic reserves. India, the world's hungriest silver buyer, has imported somewhere between 600 and 800 million ounces in the last few years. The world's largest players are moving in sync. That's not coincidence. That's coordination. This is what I've been warning about. The transition from silver being just another metal to being a geopolitical asset. It's no longer about the minting of coins or jewelry. It's about who controls the building blocks of modern industry and the monetary future. And if you think that sounds dramatic, consider this. The last time silver was treated as a strategic resource on this level was during wartime. We're talking 1940s level urgency, but this time it's an economic war. What happens when you've got surging demand from every angle, a collapsing physical inventory, and now governments stepping in to hoard? You get a market that's ready to blow. And here's what makes it even more fascinating: the psychology. Silver's been the underdog for decades. It's been ignored, underpriced, and manipulated. But that underdog energy is about to flip. Once investors realize they missed the gold run, they're going to look for the cheap way in. And that's silver. It's emotional, it's reactive, but it's predictable. People always chase the thing they perceive as undervalued, and silver's sitting right there waiting for them. Now, if you dig into the data, you'll see that most of the silver sitting in London's vaults is actually ETF silver, paper silver. So, when the ETFs experience new inflows, the metal doesn't really move into new vaults. It's just shuffled around. That's why liquidity disappears so fast. The system is cannibalizing itself. That's why we've seen consistent backwardation in the market, when the spot price is higher than the futures price. That's not normal. It's a distress signal. It's the market saying, there's no silver left to borrow. Meanwhile, the refiners who could theoretically help bridge the supply gap are too busy refining gold to worry about silver. Silver refining has become secondary. That creates an even tighter squeeze.